Folks, today is February 3rd. Where is this year going? I have no idea. Markets are going to be opening up mixed. The Dow's a little bit down. The S&P's a little bit higher. I'm still very, very concerned that the S&P and the NASDAQ momentum levels are above the 90th percentile, which means the markets are grossly overbought. Now, with that said, we could remain in these conditions for quite some time, especially with the fact that the stimuli bill is on the table. If that stimuli passes, there's a good chance the market will go higher. If not, there's a good chance we can stagnate here for a while. So you've got to be very, very cautious. At the same time, some large cap stocks like Humana, ticker symbol HUM, are breaking below the 200-day moving average and are making reasonably predictable short-term trades to the downside. Now, the health sector is not leading right now. It's been lagging for quite some time. And it's kind of surprising because a large portion of this stimulus bill is supposed to impact the health sector. And that's a problem. So I would be very, very cautious about initiating long positions that are not pullbacks. Breakouts is not where you want to be right now. Now, number two, today we're going to find out if the Dow Jones can trade for the second day above the 200-day moving average. If it can, above the 50-day moving average. If it can trade above the 50-day moving average today with the low not touching the 50-day moving average, the market will officially enter a bullish phase once again, and we will look back at this as a pullback. If the Dow does in fact touch the 50-day moving average and does not back off, then there's a good chance we're going to be in a mixed market and we will break the 50-day moving average to the downside. The bottom line is you've got to be very, very cautious because the markets are showing some signs of slowing down. And again, there are stocks that were rallying last year or rallying into the summer of 2020 that are now breaking the 200-day moving average. And again, if the momentum levels begin declining, this market is going to be in trouble. So again, everything is okay for the time being, but we are seeing some vulnerability. The NASDAQ 11-year momentum high, S&P, 88% of stocks trading above the 200-day moving average. We can't stay at these nosebleed levels again. And also, again, as I mentioned, take a look at healthcare stocks, especially Humana. It's breaking the 200-day moving average. It may be making a good short-term trade. And again, short trades are a great way to hedge your account against downside risk. If you're long Humana, you may want to get out of it for now. And it's maybe a good opportunity to trade it short because it's breaking resistance level on a multi-month basis. Hope that helps. Folks, just in case you haven't noticed yet, the markets can be heavily influenced by the richest people in the world. They can pour millions of dollars into seemingly random stocks and send the share prices to the moon. Take Peloton, for example. A lot of people wanted nothing to do with the stock when it dropped to $18. But then George Soros came flying in and bought 2.7 million shares of it, and the stock shot up to almost $140 per share. These billionaire kingmakers can completely change the outlook of a stock, and those that manage to get in these stocks before the billionaires drive the price up could cash in big. Luckily for you, stock market expert Adam Sarhan seems to have figured out how to make this happen. Click on the link below to learn how you can create a kingdom with your profits in 2021. And make sure to like this video and subscribe to the Wealth Press channel if you're watching YouTube. Stay ahead of the market by being the first to be notified when we post our next video.